Good morning and welcome to our daily earnings season special. And today's Netflix. At long last, we've got the numbers. They were released after the close last night, and well, it was a beat on the top and bottom line, and also subscriber growth was ahead of expectations, but weaker guidance for the coming quarter. It has just weighed a little bit on the stock. Nevertheless, it traded up around 2% or so in after hours trading following the close in New York. So what we got was revenues of 5.47 billion, a little tiny bit ahead of the 5.45 billion expected. Earnings per share came in at $1.30, but it seems that the metrics have slightly changed. So it's not quite comparable to the 50 cents a share that had been anticipated, but nevertheless, it's a very solid beat. And I think really it probably reflects the lumpiness, as we've discussed previously, in spending on content and marketing. So the key numbers of subscriber growth was a bit weaker than expected in the US, around 550,000 versus 600,000 expected. So a small miss there. But international subscriber growth was well ahead, beyond 8 million versus 7 million expected. So good growth in the rest of the world. That's where, of course, there's not really the competition yet, whereas in the US, it's a more saturated market, more mature market, and we saw in the quarter 4 of last year the launch of Disney and Apple streaming services. So that may be a factor, and I think the factor weighing on the outlook for the first quarter of 2020 certainly is a competition one. So they're saying that they expect to have 7 million subscribers in the current quarter, and that was against 7.82 million, which was the consensus from analysts, and that would mark a 27% decline from 9.6 million subscribers that they added in the same quarter last year. So the outlook for Netflix, as we've discussed in a preview piece that we did and so on, is just simply that do they continue to see the subscriber growth that they need when they are, for the very first time, really coming up against strong competition in the streaming arena. I think really what you need to look at is not just competition, but probably also just globally the extent to which broadband penetration is really increasing, particularly in South America and Asia Pacific. And as that broadband number creeps higher globally, then Netflix should be well positioned to take advantage. Of course, in Western Europe and in North America, broadband is pretty much universal now, so it's not the same comparison that we can make. They're expecting, well, they exited the fourth quarter with 167 million paying subscribers globally, so still very much on the up in terms of that, in that space. And as I say, shares did rise 2% in after hours trading. So that's the big one from the US last night. We've also had numbers from Burberry today, which, well, they were better than expected, and they've raised their outlook going forward, but nevertheless shares were off this morning off the back of the numbers. They said that Hong Kong sales had halved, but mainland China sales were up in the mid-teens. So strong growth in China despite concerns about the Hong Kong situation. Shares have been on the up for some time now. It's a bit of a pullback, maybe a bit of a profit-taking type selling that's happening, but I think perhaps that's just a pullback before they start moving higher again. Burberry shares currently looking cheaper compared to peers, trading at about 25 times earnings. The likes of LVMH, Moncler, trading at 30 times earnings or so. So some sense that maybe Burberry's got a little bit more room to go with a bit of multiple expansion help to boot. So that's it for the moment. That's our daily earnings season look, and we will be back at the same time tomorrow. Thanks for watching.